Happy Tuesday, everybody. This is coffee and something.
And crypto.
Crypto
Yeah,
and
man.
crypto and coffee with the Trading Bros. I'm your host, Clutch. We got P. Wellington over here on the charts. Hey, dude,
What's going on, babies?
that came to. Oh, that's just a 2 minute. I got excited. I was like, man, is that a big time frame? We were bouncing off the 800.
No, this is yeah, you were thinking we were on the daily because I normally start off on the daily. But let's get to the
Yeah,
daily.
man. What we got? Let's you know, are we about to skyrocket 1 hour? It looks like we're starting to develop a golden cross look on the 1 hour that I saw earlier too. This is uh, this is an interesting. I think it's going to be a very interesting week.
Yeah, no, I definitely do. We got a lot of news that's coming out this week, so I would expect some volatility. We've got the 800 crossing over like we've talked about. This is a little bit of reaction to that because you have a lot of people that have gone short based upon the fact that we're about to have this crossing. So, the natural thing to do is to take out those shorts, which is and has happened so far. I know we've had a bunch of liquidations on that end. And so, up here at last week's high, I mean, a lot of folks, as we kind of go through this week by week, a lot of people think, pricing going this way or the other way. I mean, last week's low, last week's high. We're still within the range where we were, last week. And so we really haven't done much. We've got last week's high over here at 22, just call it 2300, 2293. Of course, this is on ETH on the daily. And so you had a bunch of volume that came in with this pump. I mean, if you look at the volume here, we really haven't had a whole lot of volume. I mean, this one's not complete, but the one before is. And so for all the pump that we can say that we had, really a lot of volume hasn't come in the chart. So, I would take that to mean that the liquidity is still not really there in the market, and this is using liquidity of the shorts that are out there in order to push this move up. And so, based upon those two things, I would ascertain my word, ascertain that that this is not going to live very long as far as this pump is concerned. On the hourly, and for this, I'm going to hop over to USDT since that's what we trade mainly. Um, and just to kind of give everybody an idea of why we trade USDT, trading USDT in a falling market, you gain more USDT as win those trades. When you trade on a coin margin basis, you're gaining that coin. And so at this time in a falling market, since we don't believe that we've reached the bottom, it's really advantageous for us, at least our philosophy is, to trade USDT pair because we'd rather have USDT versus Ethereum at this point in time because of the further downside action that's out there. So on the hourly, as you can see, the 200 has crossed the 50. And so we've had this move up. This is a natural retrace to come down to this 50 to the 200 to kind of retest this area. We do have some vector candles in which, they normally come back to. And of course, vector candle theory, all that stuff, traders reality, shout out, So, because we also had psychological high and psychological low, and we pushed off of that, as well. And so, one, we would anticipate that we move back into this area, but we also tend to get back into these psychological areas, especially yesterday's low, all that being in confluence, and we have vector candles right there as well. So, if we do get down and start to break down this 200, I would look at some point to get down into to this 1800 area, at least for a little bit of a wick or a retest. If we're going to go back up, if we start to break down completely and we see these vectors and start hanging out at the lows of the ADR and the psychological high, if we just hang out there, then expect some more movement to the downside. And so, again, just if we came here and we hold on the 200, then expect to bounce. It's going to be you can use these EMAs as ways for your support and or ways to put your stops so that they're kind of out of the way. Don't get into the crowded trade. Is that's what I'm saying. Woo.
Don't do it.
We're coming down, man. I like this. So on the smaller time frames, this is a 14-minute. Of course, we just opened 8:30. We've been open 11 minutes. We did kind of have this move to the upside and then this move to the downside. So if this move extends, then this is probably more than just a stop hunt. And so this may be the trap here coming up for people that think we're going to get back to the daily open and then coming back down. So it'll be interesting when we get to the 200 and kind of see where we're at there, see if that holds even on this time frame. We are at this pivot point as far as levels are concerned, and so you would expect a little bit of a bounce here in this area as well. So just watch out for that. If we go to things like let's just go to the aggravated open interest. We're back at 5.1 billion, over 5 billion in interest. So this is interesting. So when you got price that comes down and you also have OI that's coming down as well, just means that we've got some longs that are either closing or have been liquidated, which means that we're to the long side, which if you look at funding rates from a sentiment standpoint, we're kind of neutral to positive. We're positive, but we're pretty much neutral. So most of the folks that are out there are in long positions. So that's positive for folks that want to go up, or positive for folks that want to go down. Because most of the time when you got folks that are on the long side, then they start to come after those guys. So if we look at the market itself, wow, market is down today big time. As far as the Dow is concerned, NASDAQ, but it is early. We're still in the first 30 minutes. Normally these things come down and they start to come back up. But I will tell you one thing, oil is at, it got up to 130 bucks, I believe. The highest it's been since I think 2012 is what they were saying. So, this is all based upon the fact that the EU is looking to ban Russia overall, because Russia's really been getting around these sanctions. They've still been selling natural gas. The bill for that, I believe, is about $1 trillion. So in order to defect or to ban Russian imports of energy, that's basically $1 trillion, and that $1 trillion is more liquidity that has to come out of the market as they go after that. So oil shot up because of that, and we are down across the market overall. And we have a lot of news coming out, which we'll talk about now. So we were closed yesterday. So we've got Tuesday, May 31st. We haven't, let's see if we can refresh this, 9 a.m. So this hasn't really come out yet, but we've got home price index, Chicago PMI, consumer confidence index is normally something that, investors are looking at to see where the consumer's at. But what I will tell you is that things that I find that are going to be more impactful coming up: S&P Global U.S. Manufacturing PMI final, job openings, construction spending, motor vehicle sales coming out on Wednesday. Here's a big one on Thursday. We got ADP employment, and on Friday we've got non-farm payroll. So a lot of employment factors are coming out this week. So there's a big question right now whether or not we have a everybody's talking about the big quit. Right, people are quitting their jobs, and so there should be good job numbers because there's a lot of availabilities to get people back to work. If you look at further analysis of that, people are saying that those types of jobs that are coming to be available are not, I don't want to say quality jobs, but they're not higher paying jobs, which help the economy, and those jobs can easily go away because a lot of those jobs are in the hospitality industry, things of that nature, where you need the consumer to spend. And therefore, if those types of things continue, that type of job growth, and not the type of job growth that leads to home purchasing and things of that nature, then we're pretty much, headed down economically, which is not going to entice the Fed to do anything different. And so all these folks that are talking about the Fed could slow down on rate cuts or rate increases, let's not get too quick, with those types of statements, because really the economy is still working to the downside. That's all I have in my analysis of the market today. What we got, Clutch?
Let's see. I will share what we have. And This is Bookmap, or not Bookmap, this is High Block. Can you see it?
Yeah, I can see it.
So you can see that we are big time balanced to the downside because of all the long liquidations that we have. And these are long liquidations that, are around $40 million or exceed it. Ironically, this big guy down here that is over 40
Is that
million.
you? Is that you? You put that in there or what?
No, but
Yeah, you didn't-
that is right around the CME for last Friday's close that hasn't been hit yet. There's a really good possibility that we're going to return to that area this week to reclaim that. Are we going to do it now, or are we going to do it shortly? That's what is left to be determined. We do have a nice short liquidation that just popped up with this movement to the downside. That's could potentially bring us back up into the $2,000 range, which is right around the last high that we had over yesterday. New York didn't trade yesterday. However, all the other markets were open. So do keep in mind, guys, 2010 is kind of your point. We break above that, expect some higher prices. However, if we get rejected there, I think we're heading back down into the 1700s. So those are the two plays that we really need to be paying attention to this morning to really try to get a good grasp on the market makers' intentions here. And this is one of our favorite programs. This is Bookmap. And as you can see, let me let this thing catch up real quick. There we go. Okay. So as you can see, we came down into this range down here around 1935. We're currently doing a retracement. We're at 1946. We have a big cluster of orders right here at 1962. They haven't spooked them yet, but you can see they're slowly trying to push these orders down. We are starting to get a flip in the CBD, and looks like we did break through. So if we come up here and bounce and continue down, then that is a confirmation that the order book has flipped. That will give us some momentum to the downside. Again, I'm not going to be surprised though if we go up and kind of retest the $2,000 range. So let's see if there's orders up in that area to kind of confirm that. If not, don't be surprised if orders do pop up. We don't have anything in there right now. However, we do have the VWAP that's above us. The daily open is above us. And as you can see, liquidity, long-term liquidity, they're really trying to mess with us this morning. Long-term liquidity has slowly moved its way up. So maybe 1900s where they want to get in, because this long-term liquidity right here at 2040 has popped up pretty recently in the last few hours here. So we have that to pay attention to. 2050, definitely something we do want to pay attention to right now if we start moving to the upside. And again, we still have long-term liquidity down here between 11 and 1300. So nothing super clear right now. However, do pay attention.
I know it's super clear. Super clear is down because that's where we're at. Still early, folks.
But yeah,
I'm just excited about this short though.
There might be some ranging that happens in here. So, and you got a nice $40 swing in between these heavy cluster of orders. So do kind of just pay attention, be careful, and pay attention to those key areas that we spoke about, and see what happens when we get there. So, other than that, I wish everyone a great day, and that's all I got.
Yeah, no, I just, macro environment is still shaky. And, when you sit in this downtrend for a long time, and we haven't really been into a long time, people are going to start giving you scenarios for things to go back up. Just be careful because the overall macro environment is still to the downside.
All right, guys, that's all we got. We'll see you tomorrow, same time, same place. Until then, AMF.